All right, and we're back. So it is Saturday, March 29th. And you'd think that I would be out Saturday night, but I am inside recording some YouTube videos for you guys. So hope you appreciate that and hit the like button for that. But if you don't know who I am, I'm Ben Collins. I am the founder and chief investment officer of Options Autopilot. It's an automated options trading platform. And I kind of want to go through an update. I've been providing various updates over the past couple of weeks and plan to do that going forward. So if you want to follow along, I'm showing all the good, bad, and the ugly on what's going on. And obviously Friday was not a fun day in the market. So I kind of wanted to go over where I'm at, what changes I've done or not done, kind of how I see things going forward and what I'm planning to do depending on what happens. For the most part, I'm automating stuff, but we're kind of comparing my manual trades to the automations and seeing how that's playing out. But just also wanted to go over some observations that I'm making on the market, if it's helpful for you guys. So let's kind of just dive into what happened. So we got Tasty Trade pulled up here, and this is actually a price level that I drew a while ago. I think it was a couple of videos ago. I just put this in here, so I did not touch this or redraw it. And you'd almost think that I had a crystal ball, which obviously I don't. I had kind of talked about the VIX had been spiking. My expectation was the VIX would come back down, probably as we were rallying into resistance here, which is effectively what happened. Obviously, I didn't know that was going to happen at the time. That's just how it can work. Obviously, if I'm seeing it, then other people are seeing it, and also maybe more importantly at this point, more other algorithms are seeing it. So right now, as I talked about before, I think that we have made a double top and we're basically in a downtrend until further notice. What would make me change my opinion on that? I would say a combination of things. Technically, if this recaptured this level, this 57.69, again, doesn't have to be exact. I would just want to have a convincing finish above there so that this would maybe be a higher low. And then maybe we could say it's going to resume to the previous highs. But I think people are ratcheting down their earnings expectations, which again is partially why I think this is happening. Still a lot of uncertainty around tariffs and how are things going to get impacted, and what's happening with the economy. Some numbers came out more inflationary, possibly a little softer on things. So all that said, the market doesn't like uncertainty. So I think that we need to get maybe a little more uncertain and maybe find a little more value in some of these names. Obviously, a lot of that's from large cap tech, but we'll go over some of that. But basically, this is kind of playing out as expected, I guess, in terms of what I was saying previously. If we look at the VIX, I need to figure out a better way to use Tasty Trade, because I used to be able to overlay things in Thinkorswim, although it doesn't look like that's as easy to do now either. It's been a while, but so basically, I was selling over up here, kind of expecting the VIX to drop. It dropped even farther than I thought it would in the short term, and as we can see now, it's kind of rallying back as it hit that resistance, and you can see it's as of the past few days, and that's exactly what the SPX is showing. It had rallied back into resistance, and the past few days has been selling off, and the VIX is going up. So how have I adjusted, or what have I done? I've basically just been running the automations, but I've made some slight tweaks here. So here's all the current open positions that I have, and I'm still, you can see on autopilot, I'm still running the same strategies, but here's kind of the key difference here. ES has been very profitable this year, as I'll show again. And MES, I basically turned back on and then switched off ES, and I'll kind of show you why I'm kind of doing that. And long term, my goal is to have that be an automatic choice for people. We're still working on that. We've had some other people ask about things like covered call strategies and maybe doing the wheel and stuff like that. So all that stuff is getting, worked on in the background. But unfortunately, you can't do everything at once. But if you want to get in, check it out. You find the links below. I actually did a presentation to the Silicon Valley Options Group last Saturday, which was fun. A lot of people seem to appreciate that. And I'll see if there's some way I can kind of link that as well. But anyways, let me go through, what has happened in the past week, basically. So I think if you recall, if you've been following along, I was kind of at my limit in terms of allocation limits for the S&P futures positions. So I wanted to trim those down, take some of those off so I could add back in, bonds, gold, crude oil, have a more properly diversified kind of allocation of these strategies. So I had done that and turned all those back on. You can see the 30-year bond futures was able to then execute on the 14th, and then it automatically came off just this last week. Was that on Friday? It was. So Friday morning it automatically closed. I think I was just working, which is the benefit of it. I was just working and it closed. So I don't currently have one on there. And then crude oil also turned it back on, and it is currently open. I think one had closed, the 21st, and then opened another one on the 25th. So also ES had closed again. That one hit automatically a profit and closed, and I basically changed back to MES from ES, and I'll go over that in a little bit. Gold continues to go higher. I had basically, again, had it off only because I didn't have the allocation. It wasn't technically off. It was just like no more money to allocate to it in the system. So now it can. And I mean, I've been surprised at how strong this move has been. I've been kind of thinking that it was looking toppy for a while, but it just continues to make new highs. Obviously, that's the benefit of automating these things. Like, it doesn't matter what your opinion is. It's just trying to exploit, I guess, somewhat of the trend, but mostly the volatility premium over time. If you recall, I'm doing the systematic put spread strategy. So right now I do have the put spread on. You can see it's already up from when I put it on. Where the heck does it say my days in trade? Days open. Okay. So you can see that these are all as of last week that they opened again. So gold went on Wednesday. These two went on Tuesday. That was the typical time I have it scheduled. And they're just running. So we can see, and I've highlighted this before, these are the older MES positions I have. Now with that sell-off again, they are in the money, and so is this. This is converted to a hedge, and I just left it on for this exact reason, just to see how it plays out, and leave it there for just a hedge purely. This should expand more. Theoretically, this could expand to $100. So right now we're approximately 50. So it could double. Same thing with these, or I guess this one is more, it can expand a little bit, but it also, if it finishes kind of currently where we are, 56.02, or obviously if it finishes above 51.50, this will expire worthless. And then this will expand to 100 as well. So that's kind of like the ideal scenario. That's one of the reasons I am using the 111s and like them. If you don't know what that is, I cover this on other videos, and I also have it in our course on Options Autopilot, which you can get for free if you request access. And I go over the 111 strategy. So also crude oil, that's currently on. I think a lot of these, so crude oil is technically profitable at the moment. Gold's technically profitable at the moment. Bitcoin is having a little bit of a comeback here, so it's profitable. So you can kind of see that, you can kind of see that all these are working, or at least providing lower correlation, and that's the whole point of them. That's why I'm doing this. And so far it's working. If we look at what I've actually made year to date, we can see it's a little bit of a different result. So we go through here, year to date gain. If you go back, this is annoying because as I'll cover, I should be higher based on the automations, but my manual trades have basically made me lose money. So that's just how it goes. I should probably just stop doing them, but it still is something I kind of want to do a little bit of, just because they did provide some decent lift at times when they were working in my favor. So we'll see what happens, but I guess it'll be an interesting comparison there. So crude oil still kind of similar to how it was, but profitable. ES is provided the most money, which makes the most sense. It's the highest allocation I've had in terms of assets, and obviously the margin requirements. Gold obviously up higher a little bit. It's been surprisingly good and helpful, and also has helped to counter some of these downtrends, because usually a lot of these inflation scares will cause the market to sell off. So that's been helpful as well. The most recent MES position I put on, I scaled it up to 3 contracts, just because I wanted to not go totally back to like very, very small position sizing. I think that's a little silly, because if it continues to work out in your favor, you don't necessarily want to miss out on earning the profit. But I did scale up to 3 contracts, so theoretically this will continue to put these on until I hit 4 positions or hit my allocation limit. So this might get stopped out. We'll see. I'm going to let it run and have it do what it's going to do. 30-year bonds, they're working. Here's where we can get into the annoyances. This ARK position obviously lost 1130, and that's annoying because I'd be up significantly more year to date. So we'd be up 5100. So would still be doing way better than the market is. Obviously, in terms of the S&P 500, I think it's down. I'd have to double check, but I think it's 3 to 4% year to date. Maybe it's 5% at this point. Bitcoin ETF, you can see that has not been profitable so far, but right now we do have a profitable put spread open, put credit spread. So again, since on the ETF, I'm only doing the systematic credit spread on that one. And right now it is at its max allocation, so it's not going to be able to put on any more until either one or some come off, or I increase the allocation, which I'm not planning to do at this point. Intel, I was wanting this to be like a longer term play. I'm down $648. It's not the end of the world, but it also just is annoying where, at one point it actually was up, I think $500. So that's how you can see some of those swings, but those swings are not necessarily helpful. The only other thing is that SOFI, again, that was up $300 at one point last week. Now it's down 400. This is just the, how the market goes. And so either I'm just sticking with these and just letting them go. XRP, like I've said before, that's just a long-term kind of stupid allocation just in case. I think that has the most convexity upside. Just, again, I'm more ignorant on the cryptocurrency space. It just, some of the story made sense, so I just figured to have a little bit of exposure, because I do have a lot of other kind of exposure and convex exposure in other things with options. That's why I mostly choose to do options over crypto, and I plan to do a video on why I do still prefer options over cryptocurrency, especially even if you're trying to get outsized returns. That's outside the story of if you believe in Bitcoin and what it is from a currency standpoint, which I don't disagree with. It's just how I'm allocating currently in terms of automation. So that's pretty much it right there. You can see I still have the same positions on. This is a risk reversal on SOFI. I would say a little bit lopsided. I'm leaning more long there. Intel, like I'd mentioned, I had added to the position when it was up at one point, which was, in hindsight, stupid, not really working out, but that's just how it goes sometimes. And we will see. If I end up getting down 60 some percent, I'm undecided. I should cut it. That's typically where I would cut it. Part of me wants to just leave it, let it go, long term. I think that hopefully it has some tailwinds with the new CEO coming in, and the news flow will be more positive. But you never know. You just got to go into it with a plan and then follow that plan in general. And I think that kind of covers anything that I've done. Oh, what I was going to talk about in terms of MES versus ES. So this is the most recent trade, and we can kind of see, I don't think this is, only because of me, right, in terms of the tactical nature of this, but we can see that the P&L is very positive year to date, and my days in trade is very low, and that's kind of been because I've been doing these automations, and then if VIX spikes and gets to, I would say, a higher IV rank, I'm more inclined to add capital with ES. And obviously you have a higher probability of success if you're selling, high implied volatility versus low. So it's kind of like where I'm pressing my bet when I think the odds are more in my favor. And again, trying to make this an actual setting, because I don't want to be going back and forth. I want the automation to just kind of do that. But in general, people with smaller accounts have just been, running MES. Some people still have 100% win rates, which is kind of crazy. That's a little bit lucky. Not everybody has been that lucky, but literally they haven't touched it, and it just has continued to go. And they've made money, and they've ended up in the bear trap area. So that's again one of the benefits of the 111. So you can see right now losing money on some of the current open positions and the most recent one. I think on MES, yeah. I think I widened out. No, not necessarily. Didn't necessarily widen out my stop on this. So it's possible that I'm getting stopped out here. And obviously it'll just keep running. And I've talked about it before, but the reason I have it at max of 4 positions, my thought is, and it goes every week, if I get stopped out on 1, or even if I got stopped out on 3, my thought is, if it's doing it each week and the market's falling, hopefully one of those ends up in the bear trap, and that would end up countering all those 3 losses. So that's the way that I'm approaching it, and why I'm doing it that way. If I add capital to this account, which, as I mentioned before, this is real money, I'll add some more money in here. I'll switch it totally to ES and just have it do it that way, because obviously that should be better long term. I'm a little bit cautious market wise, so I just want to kind of take it easy. Obviously we're up year to date and most people are not, so you can see here again the automations would be more profitable just having done them versus having done the actual, I guess, my manual stuff too. So there we go. This is my gain with my manual trades, and then 50, I think 51. I think it was similar. I was up maybe a little bit more last time. I have to double check again, but it just goes to the point of automation and just like staying out of it statistically, just being diversified and just letting things run as they should run. So that's pretty much what I'm doing at the moment. From that standpoint, I did want to go over a couple things in terms of, what the market is doing, how things have shifted. Because I think a lot of the drop, and I'm curious actually now, I haven't checked this. This is going to be live. Well, let's see if it loads with the new one. It must, yeah. This is the McClellan oscillator. I haven't checked this since Friday. So it's not as negative as I would think. And this goes to the point that I'm probably about to highlight. At least let's make sure that this is accurate. I think it is. Yeah. So somebody mentioned that the McClellan can't really get as oversold as it would normally, because a lot of stuff is already oversold, and a lot of stuff that's now getting sold is, Mag 7 and large tech. Which I think makes sense, and we'll kind of look at this here. If we're comparing, this is the growth ETF versus the value ETF, and you can kind of see the shift, right? Value's been out of favor for a very long time. and in general, probably for even longer than that. I have to look at the historical, but it does come in favor in some of these kind of higher volatility times. So you can see year to date. No, so this is past. Yeah, this is year to date. Year to date, you can obviously see that value has significantly outperformed. So if you were in value, you are technically up for the year. So people who have made that rotation are doing way better. But you can see, so that's a 11.1% difference in terms of returns if you're in the S&P versus, or I guess growth versus value. So historically, growth has done very well. Let's see if we go to this and go to max. So we can obviously see that in the long term, growth has crushed value. This is where, I mean, we won't get into it, but dimensional fund advisors, DFA, they all skewed a lot of these factors. They ended up adding in some growth factors because they were just getting crushed on their strategies. And they added in some other things too. But you can see how wide this gap is. Does it mean it will, converge? I don't know. I don't necessarily think so, but you just never know. I guess another example is equal weight versus the regular S&P. And the reason I'm looking at that is I kind of want to look at inflection points and see. I think a lot of it is driven by the Mag 7. So I wish I could find something that's like Mag 7 and then S&P X Mag 7. So if anyone knows that, put it in the comments. Just because I think maybe there would be a market signal where they're kind of crossing over each other. Because at certain points, once the Mag 7 gets to reasonable valuations, people will find them attractive again. And that could be a decent signal to, I guess, buy the market or buy the normal S&P 500 versus right now it might make sense to hold the equal weight. So let's go look at equal weight and let's go to year to date. I don't think it's crazy on the year to date. Yeah. What if we do? I mean, it's pretty close to 3 months anyways. So RSP is this equal weighted S&P 500. So if you're familiar, the Mag 7 is approximately, 50%, or at least at one point it was weighting of the index. I just lost my screen. Okay, got the screen back on. So equal weight versus S&P 500, you can see still negative, but doing much better than the S&P itself. So that's just an interesting comparison as well, in my opinion. What was actually very interesting, I didn't really realize this, over time, how much at certain times the equal weight was actually beating the S&P. So I wouldn't have necessarily guessed that, although it kind of makes sense in thinking about it. Technically, you have some smaller cap names earning higher returns. That's supposed to be true over time if they're having higher risk. But now you can kind of see that it's getting closer to back to converging, which is kind of interesting. So that was something I kind of learned. And this website, I just discovered it, kind of has a couple of these comparisons. I don't think you can choose exactly the comparison. Of course, to edit that out. So that is basically all that I was looking at the moment. I don't think there's anything to do with looking at the asset correlations these days. So I'm just kind of sticking with the program and trying to just navigate this. But I think we're still sitting pretty well, even if the market continues to sell off. I think that we're in a good spot to kind of take advantage of that. And if I don't think we really looked at bonds. So in my opinion, bonds had kind of broken this recent uptrend, but then we had this Friday rally, which had definitely helped the position, right? It was kind of break even, and now it's definitely profitable. Or I guess, is that the one that ended up closing? So that basically closed. The next one will go on Tuesday. And the reason that happened was just because of that big rally that happened. So again, that's kind of doing what it's supposed to do. That's helpful. That's the name of the game. But it does still seem like maybe this uptrend is broken. Maybe rates will end up going a bit higher. We'll see what happens there. But I can't predict the future. All we're trying to do is kind of earn our return over time. Same thing with oil. I mean, it looked like it was breaking the downtrend, but then it kind of reversed. So there's just uncertainty out there in the market. Look, as we said, they don't necessarily like uncertainty. I guess I'll touch on it. Intel. I was really hoping we would get a rip, through this level. I think if we end up getting a close above this level, I'll add again. I would assume I'm up even more at that point. And if you don't recall, I basically said I'm not adding to positions unless I'm profitable. Obviously, I added when it was profitable, and then we had another kind of fake out here, and then it pulled back. Unfortunately, as much as it's funny to say, gaps are made to be filled. It kind of looks like this might just trickle down if there's no real news with the new CEO coming in. Nothing actionable is coming out. I mean, the only positive I could think of is that it's on declining volume that it's dropping. So hopefully we can get more positive news feed and that's coming out, and that would push it higher. And in that instance, I would probably be adding to the position and just kind of letting it go, because I'm trying to have it be a long-term position. And similar to the automation, just like let it happen, because there's been a lot of scenarios where if I could have just stuck with that and not been rolling my options, it would have been better off. So same thing with SOFI. I mean, this was working pretty well until the past few days. So we'll see. Higher volume, not necessarily positive, but it's still above the support level. So we'll see. I think there's a lot of tailwinds with SOFI. I just have been a little bit baffled at how they have performed. Some news came out about it. I think them partnering with Owl Rock or Blue Owl. I can't remember what it was. Getting like $5 billion secured, and I don't know what they're going to use it for. But surprisingly, it dropped on that information. So market didn't view it as positive. But I'm just mostly just paying attention to the automation. So that's pretty much it. I guess what I was going to say is, in terms of what I'm going to do, depending on what happens next week, if we continue to sell off, it's basically going to be similar to what I did before. It's if the S&P is selling off more and the VIX is spiking, if the VIX gets over, if we start to make a new low here, I do think that's a negative. And I think we could end up falling even further, maybe down to here. I'm sure the way it'll work is it'll pressure my short position on the 111 that would otherwise just finish totally in the bear trap at max profit, just because that's just how it works. But this is going to be coming off. If VIX is spiking and it continues to spike again, I will switch to ES again, just because if it gets over this level, I'm likely going to be putting on. It's not necessarily tactical, because I kind of want to have this be a long-term strategy, right? So if it's at a higher elevated VIX, I'm going to be more likely to do it with ES versus MES. If it's not, then I'm just going to stick with MES in the near term when it's below this level. So this is still a good level to be putting stuff on, in my opinion, any strategy, even if you're doing ES. But if it does approach these levels again, I think it's going to be a time to switch to ES again. And so that's going to be my plan next week. So at this point, I'm not hedging anything. I'm not doing anything out of the ordinary, in my opinion. So just looking for those types of things and those types of moves from the market, and just letting the automations run and make money, and hopefully avoiding my manual trades as much as possible, since they're not really helping me at the moment. On the SVOG presentation, I'll mention, some people kind of had pointed out that what I was doing was mostly bullish on all the asset classes, which is technically correct. And I said kind of the reason I'm doing that is the trends are up, and if they're not, my thought was in terms of risk management, if something weird happens, usually the risk is to the upside, so the 111s and put spreads actually should benefit. So for example, like on 30-year bonds, if there's truly a risk off scenario, bonds should rally, right? So rates should drop. That should help a kind of bullish leaning 111 or put spread. That's the reason. Same thing with crude oil. If there's like geopolitical risk, if we're really going to recession and there's not going to be demand for oil, sure, it's going to fall. But I do think there's risk to the upside if there's geopolitical issues, and we're getting to a pretty low point oil price wise, and we're going into the driving season. So again, I think that all supports being, again, I don't think it's really leaning bullish, but it is technically bullish strategy. Same thing with gold. So far gold hasn't really been a risk off asset. It's more been an inflation hedge asset. The one thing that I don't know about is Bitcoin. I think Bitcoin is not really going to benefit from a risk off scenario. I think that's going to get sold off. So I will probably not benefit there. I do think the tailwinds are at the back of Bitcoin. So that's why obviously I'm doing the put credit spreads. I do think the long-term trend is up, even though I guess if we look at that really quickly, it's not really that positive in my opinion. It's not concretely up anymore. It's kind of topped out and it's turning over. But in general, I don't think it's going to collapse. I think there's still going to be demand there. So any kind of positive news that's coming out, I think is a benefit. But I do think if there's a true risk off scenario, I don't think Bitcoin is going to be kind of the like inflation hedge or the anti-government scenario, that people are wanting it to be, almost like a digital gold. I'm not saying that wouldn't happen in the long term. I just think in the short term, people are viewing it as a way to make money, not necessarily as a replacement currency at the moment. So that's just my opinion. I don't think it'll benefit, but I do think the tailwinds are higher for Bitcoin in general. So that's kind of why I am playing it that way. So it was good to have someone ask that question, and that was kind of my answer as to why I'm doing it that way. And why I view that as part of my risk management. So anyways, appreciate you watching. Hopefully this one wasn't as long, but I think it was per usual. So hopefully you guys got some benefit out of there. Check out Options Autopilot. Let me know if you have any questions. Shoot me an email. Leave any comments, and appreciate everyone watching, and we will see what happens as we move along this year. I think there's a lot of interesting stuff that can happen, and we're just trying to make money along the way, and managing risk is the key. So we'll talk to you guys soon.